Hello and welcome. You are watching Gravitas Plus with me, Molly Gambhir. A bloodbath, massacre, carnage. Not every day do you see these words dominating global headlines, splashed across newspaper front pages. All thanks to the tariff bombshell dropped by US President Donald Trump, gory scenes played out at global markets. A week is a long time in the news cycle, and the US president proved that in the strongest way possible. It's been quite a week as people around the world watched Trump's tariff tango, sitting on the edge of their seats, seeing unpredictable moves play out. And then came a somersault, the tariff pause announcement. It came a week after the tariff onslaught. Clearly, a lot has happened, and over the next few minutes, we unpack for you what things have looked like in the aftermath of Trump's tariff storm that wreaked havoc across global markets and has left behind uncertainty and fears of a recession. How do the tariff moves affect you? How was the stock market crash different from the earlier market meltdowns? Why did Trump change his mind and take a tariff U-turn? The big questions hanging in the air, and what possibly lies ahead as the U.S.-China tariff war plays out. Where are things headed between the world's two largest economies? We get into all of this and more in this edition. First, to the point when it all started. Trump announced the most severe and wide-ranging tariffs witnessed in 100 years. Now, before we go on, here's a quick guide. What exactly are tariffs? In simple words, tariffs are taxes on goods imported from other countries, and importers pass on at least some of the higher costs to consumers. Basically, firms can choose to pass on some or all of the increased cost to customers. President Trump has called the word tariff the most beautiful word in the dictionary. And his tariff onslaught on April 2nd triggered serious questions like, is the world heading towards recession? Is the US heading towards recession? What happened at the stock markets was not for the faint-hearted, marking the worst week for the US stock market since 2020. This is what the headlines look like. In India, Sensex and Nifty recorded their steepest single-day fall in 10 months. How was the crash this time different from the earlier global market meltdowns? What have the worst global market crashes looked like? In 1929, the US stock market lost over 20% of its value in 2 days and 50% within 3 weeks. The sharp fall in US stock market values contributed to the Great Depression of the 1930s. October 24, 1929 became known as Black Thursday on Wall Street. After a bull market imploded, Dow Jones lost more than 22% of its value at the start of trade. October 28 and 29 also saw huge losses, with October 28 labeled Black Monday, while October 29 was called Black Tuesday. This was a crisis. This was a crisis that marked the beginning of the Great Depression in the United States and a global economic crisis. The Great Depression, a worldwide economic downturn that lasted approximately 10 years. It led to huge declines in output and acute deflation across the world. In fact, Trump's tariff announcement has triggered comparisons with something that happened in the era of the Great Depression. An act, to be specific, the Smoot-Hawley Traffic Act of 1930. And speaking of the comparison that's being made now, there sure is a common thread. Both the moves aim to protect the interests of American businesses. This bill sought to raise import duties on 20,000 goods to protect American farmers and businesses. It was signed into law. Long story short, it triggered a brutal trade war. There was retaliation. The act was blamed for worsening the Great Depression by crippling global trade. Later, President Roosevelt repealed the tariffs through bilateral trade agreements. Naturally, comparisons are being drawn in the aftermath of Trump's tariffs onslaught. On October 19, 1987, the Wall Street crashed on the back of large US trade and budget deficits and interest rate hikes. The Dow Jones Index lost 22.6%, causing panic in markets worldwide. And then came the 2000 stock market crash. That happened because of the bursting of the dot-com bubble. The rise and fall of technology stocks led to the dot-com crash. The US tech-heavy Nasdaq index lost 39.3% in value over the year. Several internet startups went out of business. 8 years later came the subprime mortgage crisis. Basically, the collapse of the US housing bubble triggered this crisis. Risky subprime mortgages were issued to borrowers with poor credit histories. Borrowers became unable to pay their mortgages. The stock market crashed. The investment bank Lehman Brothers filed for bankruptcy on September 15, 2008, triggering widespread panic and market instability. In fact, from January to October that year, the world's main stock markets fell between 30 and 50%. Lehman's bankruptcy filing was the largest in US history, and it triggered a global financial crisis. I know what you might be thinking at this point. The US has somewhat been a common thread through all these disasters. Now jump to 2020. Global stocks crashed in March 2020. This was after the World Health Organization declared COVID-19 a pandemic. The forced shutdown of the global economy triggered widespread panic in financial markets. And then, just a few days back, we witnessed the 2025 market meltdown after Trump's tariffs were announced. And then a lot changed following Trump's tariff pause announcement, although briefly. The S&P 500 jumped 9.5%, recovering around $4 trillion in market value, roughly 70% of the losses sustained in the previous 4 days. The Dow Jones rose nearly 3,000 points. But analysts say the brief market rally after Trump's initial tariff pause has faded, replaced by concerns over long-term instability in global supply chains and investment uncertainty. What made Trump change his mind? Given that the market took a deep hit and recession concerns rose, Trump did come under a lot of pressure from corporate executives and investors to change his mind. The US bond markets reportedly spooked Trump into taking the tariff U-turn. Was a U-turn Trump's strategy all along? Will it help avoid a recession? Is the US heading into a recession? Economists have said that Trump's tariffs have increased the risk that the US and other nations could tumble into a recession in the next year. Earlier, last week, JP Morgan raised its forecast of the global economy entering a recession by year-end from 40% to 60%. What is certain is that chances of a US recession have increased. Trump says the goal is to rebuild American industry and reduce reliance on foreign supply chains. Critics, however, argue the tariffs are disrupting global trade and driving up consumer costs. Global supply chains already took a hit from the geopolitical crisis in the Red Sea, and Trump's tariffs announcement added another layer of uncertainty. US retailers are suspending orders and halting shipments as the global supply chain grinds to a near halt. Despite Trump's U-turn, respite for US consumers seems unlikely at this point. And what happens when Trump's tariff pause ends? You see, the unpredictability of the Trump administration makes it impossible to say what happens when the pause ends in 90 days. Trump's post announcing the pause suggested that its purpose is to give trading partners an opportunity to strike deals to avoid the tariffs. US officials want other countries to reduce tariffs and other trade barriers which they claim have caused imbalances. It is possible that when the 90-day pause ends in early July, countries that have not negotiated a deal face those tariffs again. Trump could also announce another pause further. The trade war between the world's two largest economies has reached new heights. The United States had raised tariffs on Chinese imports to 145%, intensifying pressure on Beijing. In response, China has announced retaliatory tariffs of up to 125% on American goods. China also said it would ignore further tariff hikes, citing no economic sense for importers. And with that, the tariff battle has entered a new phase. Analysts have warned the broader risk remains a tariff-led global slowdown, hurting both emerging markets and the US itself.